government entities, and they are what? Quoted entities. So your quoted entities can either be maybe on a local exchange, irrespective of where you are quoted. It can be on a local exchange, it can be on a foreign exchange. For example, if you are quoted on the floor of the Nigerian Stock Exchange, you fall under the definition of quoted companies. If you are quoted in London Stock Exchange, you fall under the definition of a quoted company. So you are expected, you are mandated to prepare your first set of financial statements in 2012. Now we also have, you need to be able to know who we call other public entities. Now your other public entities, they are other entities other than your significant public entity that we have talked about. So this covers entities like charitable organizations, it covers entities like PFAs, pension fund administrators. So all these falls under the definition of other significant entity. You will see that for other significant entities, they have a transition, they have their own transition date to be in 2000, and everybody has a transition date to be in 2011, but they are expected to prepare their own set of financial statements as at 2013. While for SMEs in Nigeria, they are other entities that are not quoted on the exchange. So we can call them what? Unquoted what? Entities. They are strictly what? Private entities. They are private entities whose debts, whose equity or debt instruments are not traded in a public market. Yes, equity or debt instrument is not traded in a public market. Such entities are not in the process of filing. They do not file, nor are they in the process of filing any of their accounts, be it interim figure or comprehensive set of figure with any security commission, be it local or international. So all those entities, small and medium, they fall under the definition of what we call small and medium scale enterprise. So they have a compliance period of 2014 to switch over to IFRS application. A brief recap of what we have learned about the definition of our transition period. We were able to establish that your transition period is the beginning of what? The earliest period to which an entity presents a full comparative figure under IFRS. That is what we call your transition period. So for a reporting entity, irrespective of the different category of that reporting entity, we are able to ensure that the transition period is what? In 2011. So what do we mean by previous gaps? Basically in Nigeria, they are statement of accounting standard issued that has been issued in the past by Nigerian Accounting Standard Board, and what we call reporting date. They are the date in which the preparer of financial statement prepare his first set of financial statements. It can either be an interim figure, it can be a full set of financial statements. And we have rightly described who listed and significant public entity are. They say listed and significant public entity are what? Government entities. They are government entities, and they are what? They are quoted entities. So the quotation can either be from a local market, and it can be from a foreign market. And we also have a definition of who other public interest entities should be. We said basically we have a charitable organization, then we have PFAs. Charitable organization and PFAs. And we have also described who an SMA is. Now let us look at the format as required. What is expected of you in line with international financial reporting standard 1 for first-time adopters? What are you expected to comply with as a provision? Now, financial statement to be produced by a reporting entity, it must provide a high quality, transparent information. That is a requirement of IFRS 1 for first-time adopters. He said it must provide what? High quality, transparent information in an efficient cost-benefit manner. The benefit for providing that information must outweigh the cost of that information. Of course, IFRS report, by the time you are done with presentation of your report, the immense benefit that it has in form of making your financial statement to be comprehensive and comparable with any set of financial statement prepared by your counterparts all over the world. It has a benefit of facilitating international trade and bringing about harmony, it had credibility to your financial report. So to be able to provide this high quality set of financial statements, the requirement of IFRS 1 is in such a case that you must present your opening statement of financial position. So your opening statement of financial position as at the transition date, it is a basis, it gives you a basis for making your financial statement to be comparable at the first reporting date. So it makes comparison, it makes you to be able to present what we call a comparative figure. It makes you to be able to compare, have a comparative figure, so that at the very first day your financial statements can be comparable both at the transition date and at the first financial reporting date. Now let's just go to disclosures. What does IFRS 1 for first-time adopters, what does it require of you? It requires that at the very first day that you are presenting your IFRS financial statement for public use, you must be able to provide an explanation. We call it what? A statement of financial position reconciliation statement, which shows how you have converted from previous GAAP to what? To IFRS. So you must also be able to provide what we call your income statement reconciliation statement, so that you'll be able to compare you'll be able to compare how you have converted those figures at the to be more comparable with the first set of financial statements that you have prepared. And in your financial statement, you must be able to provide the disclosures, an explanation of the situation that led to the adjustments that you have done in your reconciliation statement. Now let's just quickly look at application of what we have discussed so far with this small example. We have Super PLC. Super PLC, by status of this company, PLC means it is a public limited liability company. It means this maybe this PLC is quoted on the floor of the Nigerian Stock Exchange. Now it presented its financial statement under IAS annually as of 31st December each year. The most recent financial statement were presented to 31st December 2013. The most recent was prepared to 31st December 2013. Super PLC decided to adopt IFRS as at 31st December 2012. Now this company wants to adopt IFRS as at 31st December 2012 and to present year comparative information for the year 2011. Now, if you look at this, you were told that you want to adopt IFRS in 2012, year of adoption, 2012. Now, if you look at this year of adoption, it means if you want to adopt in 2012, you would have been preparing, year of preparation. You would have been preparing as at when? You would have been preparing as at 2011. Preparing to make the what? To present what we call a comparative figure. A comparative figure. Don't forget what we have talked about. We said this comparative figure comes in form of opening SFP. Now, your opening SFP, you want to adopt, you want to deliver his first set of financial statements in 2012, and is preparing to do that in 2011. It means a closing figure of 2011 will represent opening figure in 2012. So he is expected to represent the figure for 2011 to also be IFRS compliance in order to be able to present that opening figure for 2012. And is expected, based on IFRS 1, to provide a reconciliation statement of how he has arrived at those opening figure in 2012. So the reconciliation statement that he has included in his financial statement must also provide an explanation of how he has arrived at those figure that is using as an opening figure, an opening comparative figure in the first set of financial statements that is presenting. So to address a requirement of the question, when will Super Inc. PLC prepare its first statement of financial position of IFRS, is going to do that in 2012. However, to be able to do that in 2012, you need to prepare what we call opening comparative figure. Opening comparative figure. And that opening comparative figure is taken from his 2011 position. That is all about application of our understanding of IFRS 1 requirement as regards presentation of comparative figure in the first set of financial statements in which an entity presents for public use.